about Valentine's Day. તો આપણે બી આપણી બજેટ સાથેની એક વેલેન્ટાઇન ડેટ આજે ફિક્સ કરી છે. I can see a lot of red color on the screen. Jigar sir થોડા રેડમાં છે, મુકુંદભાઈ રેડમાં છે, એટલે that Valentine flavor is there. So let us begin our program. I would request Mukundbhai to inform us about the program and welcome everyone on the program.
Welcome all the participants on this webinar. As usually, post-budget, Chamber is organizing webinar on the proposed changes in the budget. In this sequence, we have already held webinars on the direct taxes, but the webinar for the indirect taxes was pending, and it was the long demand of all the members of the chamber. So this webinar is only concentrated to the discussions for the changes in the indirect taxes. And friends, as you know that nowadays the indirect taxes encompasses major two acts. One is the Goods and Service Tax Act, another is the Customs Act. And you all are aware that any changes proposed in the Goods and Service Tax Act are not going to impact immediately the changes, because the system is that the proposal in the Goods and Service Tax Act is for the CGST Act, and after the assent of the President, all the states will have to ratify their own act, and after that it will be notified. So any proposal in the Goods and Service Tax Act will come at least 10 to 12 months later on. But the proposed changes in the Customs Act, which comes immediately, and few changes in this budget has been proposed from 1st of the May, and few changes which is in relation to the textile machinery rates. That is most probably what I understand that will come from the 1st of the April 2023. I think Manish will take the customs issues in detail, and Jigar Bhai will take the details proposed changes in the GST Act. With this brief of this program, now Jigar Bhai, the floor is yours. Please start.
I'll just give a brief introduction about our two speakers for the day. So Jigar Shah is a partner in indirect tax and practicing partner in indirect tax practice team at Lakshmi Kumar Sridharan. Jigar Bhai is responsible for litigation and consultancy in goods and service tax and excise areas, and he has assisted a number of service tax providers and manufacturers. Past experiences: before joining LNS in 2008, he's worked in indirect tax division at KPMG Pune and as an assistant manager, and has consulted various MNCs. On the education background, he's a BCom, a law graduate, and a chartered accountant. I'll also give a brief introduction about Manish Jain. Manish Jain is a joint partner at the firm and helps his client in the area of indirect taxes. Manish practices includes a mixture of litigation practices in the area of customs, excise, and foreign trade policies, and represents before the tribunal and quasi-judicial authorities. Manish is a member of the Bar Council of Delhi. Manish has particular experience in customs, FTP, and GST. He has been advising several companies on various and varieties of issues having on the background of GST and FTP. Thank you. I'll hand over from here on to Manishji and Jigarji. Thank you.
Thank you very much, sir. I will start with this GST proposals, because these GST proposals are very few, so may consume some lesser time, but these changes are very, very important. And Mukund has rightly pointed out that all these changes are not going to come immediately because the CGST Act is a parliamentary act, so it will get amended as soon as the President gives the assent to the bill. So it will become the act. However, there is a provision that all these amendments will be notified to be effective at a later date. So unless and until this notification for effectiveness of these provisions are issued, it will not become effective. Mukund sir has rightly pointed out that what is the reason? Because whatever that we have, this CGST Act, all state GST Act have parallel provisions. Identical provisions are there. So The state governments also will amend their GST law. In some of the states, we are facing these elections. Legislative assembly may constitute, then the government will take place, and all those changes will take place. Many more elections will come because we have a periodical elections. So it may not be possible for all the states to amend their GST laws also in line with the center. It may take some time, and that's the reason that all this will become effective on a later date. Now I will share my screen for my presentation. So, if you look at the budgetary changes in this 2022, almost all are related to input tax credit and compliance and return filing. Because what we have witnessed is that despite of the fact that the GST collections are increasing day by day, and the last quarter, the average collections stood at 1,30,000 crores. So, GST collections are on rise. However, the government is becoming more and more strict on this side. If you look at the budgetary changes closely, so this all will be the coverage of this input tax credit, relaxation in time limit and returns, and some miscellaneous amendments. Input tax credit. Basically, whenever this, as we all know, this GST was introduced for the first time in France in 1954. Thereafter, slowly and gradually, many of these countries, they introduced this VAT. The purpose of this introduction of the VAT is that it eliminates the cost of these taxes. So it is called as a value-added tax. In Europe, it is called as a value-added tax. UK also, they say that it's a value-added tax, UK VAT Act 1994. Australia says GST. So the nomenclature used in different countries is different, but ultimately it is functioning on the same system. What it aims to give is that whenever a trader purchases some goods or services, then the GST or VAT is charged on his supplies. Whatever the tax he is paying on his purchases is given to him as a credit. So when it was introduced, it was like the GST commissioner will say, you come to me, whatever the the purchase invoices you have, you stick to on this wall, and whatever the sales invoices you have, you stick to on this wall, and whatever is the difference comes, you pay me. So it's a pure form. It's a pure form of GST, and therefore whatever the purchases are there, you will get the credit. If we come back to our legislation, section 16 is talking about the eligibility of input tax credit, claiming the input tax credit. It says that subsection 1 says, any input tax paid on your inward supplies as a recipient, which is used in the course or furtherance of business or intended to be used for the business, they will give you the credit. However, there is a subsection 2. It starts with non-obstant clause, notwithstanding anything contained in subsection 1. These are the conditions you have to fulfill. So the first condition is that you must have a valid invoice or a debit note in your hand. You must have received the goods or services. Taxes must have been paid to the government, and the returns are to be filed. If you look at this from the perspective of the recipient, like I am a recipient, and if I am procuring some supply, then first two conditions, invoice has received, goods or services are also received, but then tax is paid to the government. It is otherwise impossible for me, because the government has not provided any mechanism as a recipient that I will directly deposit the tax to the government. So far as this condition is concerned, we have seen a huge litigation on this area. Many cases, what has happened, that the one person will take the registration, he will come into the GST system, he will issue sales invoices, suddenly he will vanish out of the system. What is called in a country like UK, they say that a VAT invoice or a GST invoice is a check written on the government. So whatever the tax is mentioned, the recipient will get the credit. So they say that it's a check written on the government, that I must have to be given credit to the recipient. There also this type of frauds have happened. that one person come into system and suddenly will go vanish out of the system, fly-by-night operators. All those things have happened in so-called developed economy like UK also. They call it as a missing dealer or a carousel fraud. So in India also this has happened. And the government was also thinking, debating that how to curb this practice. Because if you look at the magnitude of the bogus invoicing, and particularly the figures published by the government, the numbers published by the government are not encouraging so far as Gujarat is concerned, because it is becoming the hub of this type of illicit activity. Government was thinking on curbing this type of practices. So debate was going on, and particularly in 43rd council meeting, all those things were also discussed, that how to curb this, and they were thinking of making the amendments. If you look at the clause 109 of Finance Bill 2021, section 109 of the Finance Act 2021, let us say, it has introduced one another condition in section 16.2. It says that whatever the inward supply you have received, it has to be communicated by the supplier in his GSTR 1 return. It should appear in your GSTR 2B, and then only you will get the credit. Now that particular amendment has also recently been brought into from 1st January 2022. So now this 2B has become a more important document for availing the credit. Earlier we have this system of checking with GSTR 2A. If you look at closely, this GSTR 2A was existing right from the beginning of the GST, implementation of the GST. No one put attention to this GSTR 2A. And whenever we are referring to this GSTR 1, GSTR 3B, GSTR 2A, 2B, this GSTR R, so far as in 2A, 2B is concerned, it's a misnomer. So don't get into impression that because it's a return and you have to file it something. No, it's a automatically generated statements. GSTR 2A, so called as a dynamic. GSTR 2B is a static form of whatever the eligibility or input tax credit available to you. So now this is another condition they have put, that unless and until it is getting reflected in your GSTR 2B, you will not get the input tax credit. So now in this budget, now they have proposed for another condition. It says that new condition for availment of credit, it should not be restricted under section 38. Now originally, if you look at the scheme, section 37 talked about this filing of GSTR 1. There was a 3-step process. I'm talking about July 2017. My apologies for taking you to the July 2017. But that was there. The original plan of the government, the vision of the government was that by the 10th of the month, succeeding month, the supplier will report all his supply transaction in GSTR 1. Then it will appear in GSTR 2 of the recipient. And when he will file his GSTR 3 by the 20th of the succeeding month, he will have this whatever the supplies, input supplies, and then available credit available, and ultimately he will pay the taxes through GSTR 3. From the very first day, this system could not be implemented. As a time gap arrangement, this GSTR 3B was introduced. And you all know that decision arose from Surat itself, that whether this GSTR 3B is a return or not. Our Gujarat High Court held in favor of the SSC. Ultimately, it got reversed in October 2021 in case of Bharti Airtel, that GSTR 3B is a return for all the purposes right from the beginning. Ultimately, government also amended that rule retrospectively, but that was all subject to challenge. And litigation was going on. But ultimately, in October 21, the Supreme Court said that GSTR 3B is a return. So now, what the system worked at that point of time. So you will have then slowly and gradually government also started facilitating the recipients by introducing this 2A. As mentioned in this Bharti Airtel judgment, it was made available in September 2018. And then the government has also issued a public notice which says that this GSTR 2A is not a sacrosanct document. Ultimately, it's a facilitation measure to the recipient, and whatever the credit as per your books of account available to you, you are eligible to claim input tax credit. Then this dispute started. And then so many notices are also issued. Many of your these members must be facing this problem of discrepancy in GSTR 3B and 2A credit, and notices are now mechanically issued to all these SSCs. Now, what the government took further steps. Then the 2A, then this from 9th October 2019, this GSTR 2A was given some statutory recognition by introduction in Rule 36(4), that what credit you can take is, suppose say for example, your credit is matching 100 rupees in 2A. So unmatched credit portion, you can avail 20% of that. Then suddenly in December 2019, it was reduced to 10%, and then from 1st January 2020 onwards, it was restricted to 5%. So these are the steps government has taken to all this. Why this happened?
Sir,
A person.
Just a small request from some participants. If the mic can be closer.
Mic can be closer. Okay, but then give me 1 minute only, sir. I will just add one additional device so that it's very clear. 1 minute only, sir. 1 minute. Give me 1 minute.
No problem.
Sir, is it better now?
Sir, much better. Much better.
Rohan?
Sir, much better.
Okay, sir. So government also started to take some measures to curb this practice. And why this happened? GSTR 2A is a statement which shows that your eligibility of disbursed credit. But if suppose the supplier files GSTR 1, if he does not file GSTR 3B, then also it will get you will get as a credit, matched credit. So now we have from October 2019 onwards, what the government introduced this type of scheme. Today, you have 3 types of credit. One is your matched credit as per 2A, 2B. Then second one is the unmatched credit. And all of you are aware by now that we have a concept of blocked credit under section 17(5). Now there is a 4th type of condition, which is the unrestricted credit. Means now you will have a restricted credit. When you can avail this input tax credit, it should not be restricted under section 38. Now, what are the circumstances under 38 which can block your credit or get your credit restricted? We will see in a minute. Section 38 is completely substituted now because this GSTR 1, 2, 3, as we discussed, is no more required because the sequential process never could take place. So 38 was there. So now they have completely substituted and provides that an auto-generated statement in GSTR 2B containing details of ITC shall be made available to the recipients. So now your 2B will have another additional column which says that these are all the restricted credit. So whatever is appearing as a restricted credit, you will not get that credit. What are those restricted credit? We will see in a minute. So basically, this restricted credit will not be made available to you even if you have paid entire consideration along with GST to the supplier. And such statement will contain details of inward supply in respect of which ITC may be available to the recipient. Now, the way this system is going to function, you can see this. These are one by one all. The statement will specify details of supplies in respect of which ITC cannot be availed wholly or partly by the recipient if such supplies are received from the following persons. So the first class is a registered person who has furnished details of supplies under form GSTR 1 within such period of taking registration as may be prescribed. As I said that majority of the instances what has happened, a person will come into system, he will take the GST registration, start issuing the invoices, file GSTR 1. He will not move further. The recipients will get the credit. So what happens? A VAT invoice or a GST invoice issued is a check on the government. So government must give that credit. It is matching in 2A. You might have paid to him, but he might not have paid to the government. So ultimately, government is the loser. So to curb this type of practice, now they are saying that if suppose a new person is getting the registration, government will prescribe the time till the time
it will appear in your GSTR 2B as a restricted credit. So you might have paid to the GST consideration, GST also to the supplier, but since he is a new registrant, government has no trust on him, so this credit will be restricted credit. Now, this amendment will have a severe impact on startups or a new registration. They will have a tough time in a sense that today it's a competitive market. I have to be competitive when I'm offering something, my services or my goods to someone. So prices are almost matched. Now I am a new registrant, I'm a new person, new entrant in the market. I am offering a competitive price, but the recipient will think that since I am a new registrant, government may block my credit, and unnecessarily they will have to suffer for some time to get this credit as an unrestricted credit. So far as possible, those people will not purchase the goods or services from me. So in a way, this will affect the business of a new startups or a new registrant, howsoever genuine they may be. Because the recipient will think over that since I am not getting the credit immediately, why should I purchase from him? And always there will be a clouds of doubt that whether this fellow will ever get this restricted credit to unrestricted credit. So in a time to come, when this amendment becomes applicable and government prescribes that time period, then it will have some severe impact on the new registrants, new businessmen. Now the second class is a registered person who has defaulted in payment of GST and the default continues for the prescribed period. So suppose because all these things government has kept one window open that they will prescribe by rules or by whatever way. So they say that person who has defaulted in payment of GST, if now your recipient does not pay GST to the government, whatever the credit you have availed from him will be appearing as a restricted credit. So if you look at the aim of the government, that this restriction on input tax credit is becoming stringent and stringent. Now look at the third class, a registered person whose GST payable as per his form GSTR1 exceeds GST paid by him as per form GSTR3B during the prescribed period, and such excess is beyond the prescribed limit. As I said that they will file GSTR1, many cases they file GSTR1, they show some supply. Say for example, a 200 rupees supply they have shown. But when they actually pay GST, that is paid on 100 only in 3B. So there is a discrepancy in GSTR1 and GSTR3B. So if suppose this discrepancy is exceeding the prescribed limit, then whatever the input tax credit you have, that will get as a restricted credit. Now the downside of this type of amendment is there is no room or no scope for a genuine mistakes. Suppose my accountant has mistakenly shown the turnover of 100 rupees in GSTR1, but in fact it is 100 only. By the time I find my GSTR3B, I come to know, I realize that there is a discrepancy and I correct my mistake and I file GSTR3B only for 100 because there is no sense in paying GST on 200 rupees. So this type of cases, if that is beyond the prescribed limit, a genuine mistakes also, now the recipient will get suffered. So there is no room, there is no scope for genuine mistakes, bona fide mistakes. And a registered person who has availed ITC as per GSTR3B, in excess of ITC that can be availed by him as per GSTR2B, and such excess is beyond the prescribed limit. As I said that now this 16(2)AA is there. Whatever the credit is appearing in your 2B as a matched credit, eligible credit, that alone you can take. However, say for example of particular month, your 2B shows that 100 rupees is a credit. But in your GSTR3B, it appears that you have availed the credit of 150 as per your books of account. Because it has happened in the past. Many people, despite of the fact that the credit appearing in 2A, the SSEs were under the impression that there is no statutory recognition of this GSTR 2A, though it is mentioned in Rule 36(4), but it has no statutory backing because the rules are subservient to the main provision. Since there is no provision enabling GSTR 2A, therefore many of the SSEs have ignored the credit appearing in there 2A. They have availed the credit as per their books of account. Now, because from 1st January 2022 onwards, GSTR 2B has been given a statutory recognition. It is appearing in then 16(2)AA. So if you avail any credit in excess of credit appearing in your GSTR 2B, then also the supplier. If suppose the supplier has availed the credit, then also your credit can get as a restricted credit. So all these instances will ultimately render your input tax credit as a restricted credit. Now,
Sir, here, when you raise the issue of 3B and GSTR 1, can
Yes,
you say that section 39(9) will become ultra virus then?
no, sir. See, now after this VKC footstep, forget about anything is ultra virus, sir. Very difficult to say. Because sir, if you look at this amendment, many of the things you will find as we go section 41, the amendment carried out there. Because if you recall, this section 16(2)(c), constitutional validity of that section, whether the tax is to be paid to the government, is challenged before various high courts, including our high court, right? So what has happened that the central government moved an application before the Supreme Court to say that all these petitions should be clubbed together and hearing be done by the Supreme Court itself. Then Supreme Court was briefed on this aspect that the Andhra Pradesh High Court and Madhya Pradesh High Court, they are on advanced stages of hearing these petitions, and therefore Supreme Court did not entertain the application of the central government to club all these petitions before the Supreme Court, but they directed the Madhya Pradesh High Court in case of this Cummins India to say that you give the dispose of this petition within 2 months. So though these 2 months have passed, no verdict from Madhya Pradesh High Court, but it must be fully heard. That is what I understand. But there is no, sir, no ultra virus, sir, because why do
Contradiction will be there. Contradiction will be there.
Sir, now it will not be, sir. If you because you will have to read section 16(2)(a) to AA along with 39(3), sir. So whenever you are this is pertaining to the supplier, sir. This is all these 6 instances are for the supplier. A registered person who has availed ITC as per form GSTR 3B in excess of ITC that can be availed by him as per GSTR 2B. So I am a person, I am a supplier. I have shown the credit in my 3B as 150, but my 2B shows 100 only, and such excess is beyond prescribed limit. So this excess 50, let us say it is within the prescribed limit. So as a recipient, your credit will get restricted. Sir, section says that the statement will specify, if you look at this section, provides that an auto-generated statement containing details of ITC shall be made available to the recipients. So it is for the recipients. So suppose your supplier avails this credit in excess, then it will get your credit as a restricted credit.
Sir, he is missed out to report on 3B. He is reported in GSTR 1.
No, sir. What it says is that GSTR 3B, sir, GSTR 1 is not pertaining to any input tax credit, right? It's only for the outward supply.
Outward line.
Okay. Now, as a supplier, I have shown my outward supply is 100 rupees. In GSTR 3B also, my outward supply is 100 only.
Sir, for a moment, I would predict that I have by mistake filed a nil 3B. So now I will be restricted to claim that input credit.
So then you will fall into third one, sir. A registered person whose GST payable as GSTR 1 exceeds GST paid by him as per GSTR 3B.
Correct.
So you will get there. So they have tried to cover up all these things. Sir, we will also see that this amendment is not going to cover certain transactions which has happened. Ultimately, this is aiming for, sir, they have very limited this system. If you look at this, what they are going to do is basically comparison between GSTR 1 and GSTR 3B. Okay. Now for all the registered person, they are going to carry out this exercise. So they are, what I was told, I addressed one webinar for the Chemexil last week. There one participant told me that the system is ready on GSTN. And I was about to tell him that the moment they say that the system is ready, I have a reason to get scared, because they say that the system is ready, then everything will be blocked. So, sir, if you closely look at all these amendments, majority of the transactions, okay, we have seen are of a circular trading. I supply to you, you supply to Mukund sir again supply to me. But in a system, what happens? We all pay tax through the illicit credit, maybe, but we all pay tax. Our GSTR 1, GSTR 3B remains same. those type of transactions, this amendment will not able to catch. Because if suppose the allegation of the department in cases of circular trading is, because in circular trading, they are also not saying that the tax is not paid. Tax is paid. Obviously, it will get reflected in GSTR 2A. If suppose the allegation of the department is that you have not received the goods, then the amendment is not for that, because there is already a provision in section 16(2). You must receive the goods or services. So this amendment is not actually eyeing that. A circular trading in even after this amendment will not be able to caught by the system, sir. Okay. So that is how it's going to work. And let's see how they come up with the system and how this works, because it may happen this. We had this matching concept of 43, 42, 43 and 43A that has never been implemented. So because they have now repealed this 43A, section 43A, which was introduced in 2019 for this matching only. Somehow due to this shortage of technology and software, they have not implemented it. So now that is repealed also without any implementation. So that this also may get away, but as of now, whatever they are thinking that what type of transaction they will be able to catch, these are the transactions. And now the fifth one, a registered person who has defaulted in discharging his GST liability by utilizing excess ITC than the permissible limit under section 49(12) of CGST Act. We'll see that 49(12) also. Basically, what it says, we have this rule 86D in force. It says that you cannot utilize the full ITC, like you have a liability of 100 rupees GST. This entire 100 rupees GST cannot be paid through ITC. There are some restrictions. So those restrictions, if you cross those restrictions, then also this credit will get as a restricted credit at the ends of the recipients. And by other prescribed class of persons, like they may prescribe tomorrow that somebody who is already tainted with all these type of transactions, they are not able to catch. So they can say that we are prescribing this class of persons as a persons whose credit will appear as a restricted credit. Now the challenge in this type of provision is because it's not analyzing on a transaction wise. They are not transaction wise analyzing this. Even a one transaction, I am a genuine supplier. I am a genuine businessman, genuine trader. I have purchased some credit, some goods from a person who might have defaulted in all these things. So my entire credit will get my credit, so far as that supplier is concerned, my entire credit will get blocked. Now, this type of things, like the magnitude of this type of credit, they are even a slightest mistake on some supplier, all his recipients will get restricted, because they are not going a transaction wise. They are going on a data, whatever you have furnished in GSTR 1 and 3B. So transaction to transaction, they are not matching. If one of the transaction is getting tainted, then all his recipients will get as a restricted credit. So that's a downside of this type of sweeping amendment, because there is no otherwise leeway in this. Now, sir, if you look at this another section, sir, what we can do is that we can have a question answer session on GST after my session or Mani's session, whatever is convenient to you. Okay, so
I think if you are comfortable, we can just take it up along with the subject.
Yes, I am fine with anything, sir. If you want to ask any question on so far as this application of section 38, we can do it.
So there is one question. What about section 16(2)(c) and section 41(1)? Department is saying that prescribed manner stated in 41(1) refers to matching concept and that covers GSTR 2A.
See, basically, this section 16(2)(c) as it stands today, it is subject matter of challenge before various high courts. In our Gujarat High Court, the matter is pending. Basically, what the SSCs are claiming is that a law cannot compel one to fulfill a condition which is otherwise impossible to fulfill. Okay, this proposition is emanating from the judgment of Honorable Punjab and Haryana High Court in case of Berulal Balchan. There, the similar proposition that they say that tax is to be paid to the government. Now, if you go little back in the history, then we have a decision of this Mahalakshmi Cotton and Ginning Mills, Bombay High Court. That is also around 2012 decision. There also the section 48(5) of the Maharashtra VAT Act also contains the similar provision, identical provision. So that was constitutionally challenged. And we have our decision of Honorable Delhi High Court in case of this Arise India and On-Quest merchandising people are referring to. There also the similar condition in their Delhi VAT Act where the taxes paid to the government was held as unconstitutional so far as the transactions are between two genuine supplier and the recipient. And both these decisions are now affirmed by the Supreme Court. Now, which one you will prefer? Because statute like section 48(5) of the Maharashtra VAT Act was almost there in all the state VAT Acts. But the distinguishing feature in the Mahalakshmi ginning and cotton and ginning was the government gave the assurance to the court that these are the process we are going to file. And in fact, to that effect, the affidavit by the state government was filed before the Bombay High Court that in these type of cases where there is a missing supplier, missing dealer, carousel fraud, then our attempt would be to first catch the supplier and not the recipient, and we will not harass the recipient. On the basis of that, the Bombay High Court has given the verdict. So challenge in this, like we had this, Madras High Court has tested this proposition in GST in case of this DY Bridel. Madras High Court has said that direct recovery from the recipient is not permissible. The similar case happened before the Calcutta High Court in case of this LGW Corporation. There also the Calcutta High Court has remanded the case, but with the observation that if suppose these are all bona fide purchasers, genuine recipients, then you cannot recover all this GST from them. So that was the observation by the government. In my view, to cover up this type of cases, now if you look at this section 41, because the person who has asked this question, he must have referred to the old section 41. Section 41 is now proposed to be substituted entirely. Section 41 dealt with the provisional claim of input tax credit. Now it is completely substituted. Now there is an inbuilt mechanism they are proposing to have. They say that ITC can now be availed based on the self-assessment. You assess, self-assess, you yourself, whatever the credit is available to you, you avail. If suppose it is found that the supplier has not paid tax to the government, then we will ask you to reverse that input tax credit along with interest. So how that happens? Suppose you avail the input tax credit today, your supplier has not filed the GST 3B return, so tax is not paid. Now there will be a mechanism as per section 31 that they will now have a system which will see that how many people have filed GSTR 1 and how many people have not filed GSTR 3B for the same month. So their system should be able to catch those type of suppliers, those who have filed, they have not filed GSTR 3B. Those who have not filed their GSTR 3B, as per section 41, they will ask the recipient to reverse the input tax credit along with interest. So that is how now it's going to happen. In my view, to overcome the challenge they have faced of the section 16(2)(c) in various high courts without waiting for the verdict, because they may be afraid that ultimately this is going to against us. So they have this amendment as a, you can say, amendment precaution. Then let's have this amendment. And this part says that the credit will be availed by you once your supplier makes the payment. Okay, now the analysis of this section, what does it say? If suppose as a GST registered person, if I go to claim refund of anything before the government, then they will say that it should not be unjust enrichment to you. The principle of unjust enrichment will apply. But what happens in this case? The government is getting enriched at both the ends. They say that I am a recipient, I have availed the input tax credit. Since my supplier has not paid the tax, they will recover along with interest from me. But when my supplier will pay, because he has a belated payment of tax, he will also pay the interest. So government is getting doubly enriched by charging interest at both the ends. Now there is no such inbuilt mechanism for only for the re-availment of input tax credit, not as a refund of this interest. So government will get the interest from both the ends. Now the question can come that whether this interest can be called as a refund or not. That we will have to test when this amendment comes operative. And there are many portal methodology of communicating this non-payment at all, these are all subject to challenge. But I would like to bring to your notice the difference between section 38 and 41. 41 has an inbuilt mechanism that whatever the credit you have reversed earlier along with interest, if your supplier pays tax to the government, you will be able to reclaim the input tax credit. And as we all know, this reclaiming of input tax credit, there is no time limit. So time limit as per section 16(4) is applicable for the first time credit. Now in section 41, there is an inbuilt mechanism of re-availing the credit. However, there is no such word in section 38 that once my credit gets as a restricted credit under these circumstances, where it will become unrestricted, and whether it becomes unrestricted, I am eligible to claim input tax credit or not. This section is silent. So tomorrow, a GST officer can take a disadvantage of this type of lacuna in the law to say that once the credit is getting a restricted credit, you will never ever get it back. Possible. Time will tell, but it's possible. Now all those arguments, because this section once it becomes operative, I think you will not have any challenge to the section 16(2)(c) also. It's there, but under section 41, they can always ask you to repay that amount along with interest. Then certain some time limits. That what has happened, the law committee suggested the GST council that today what kind of mechanism you have, like say for example section 16(4) says the time limit to avail input tax credit. What is the time limit for availing input tax credit? So let us understand by way of an illustration. I received one invoice dated 1st April 2021. The last date of availing that credit, the invoice which I received on 1st April 2021, the last date of credit would be when I will be filing the GSTR 3B for the September of the succeeding financial year. Means invoice is of 21-22. Succeeding September would be September 2022. And when I am filing the return for the month of September 2022, that is on 20th October, I have time to take input tax credit of that invoice. The challenge to this type of provision is, suppose the government extends the time limit for filing the return for the September, that GSTR 3B for the September can be filed by December. So time limit also will get extended. So the law committee suggested that instead of this, you fix up a time. By after that, the credit cannot be availed under any circumstances. So they have fixed up the date now as a 30th November. So instead of this due date of furnishing GSTR 3B for the month of September, it will be 30th November. So let us continue with the same illustration. I have received the invoice dated 1st April 2021. The last date of availing the input tax credit of that particular invoice would be 30th November 2022. Now again, let us take an example. If suppose the date for filing the GSTR 3B of November is extended, then what? But then also, because it is not now linked with the filing date of furnishing the return, 30th November means 30th November. Even if the return for the month of November can be filed by this February of the succeeding calendar year or whatever, your right of availing the input tax credit will fix on 30th November. So wherever this type of time limit was there, we have this time limit for issuance of the GST credit note that was also linked with the month of filing with the return for the month of September. Now this is all extended to 30th November. So everywhere they have changed it to 30th November. So now you will have a fixed date. So this question we have taken, that whether ITC can be taken by the due date of filing of GSTR 3B for the month of November. Answer is no. Now there is a time limit fixed, so there is no extension of complying with all these provisions. Now there are small changes. If you have not filed the return for the month of, say for example, January 22, you cannot file GSTR 1 for February 22. So it's a sequential process. All your compliances for the past also should be there. Unless you fulfill all those compliances, you will not be able to move forward. So the theme of this budget was regulation on input tax credit and the sequential return filing. Same with the GSTR 3B. It is not allowed to be furnished if GSTR1 for such tax period is not furnished. If suppose you have not filed the GSTR1 for February 22, you cannot furnish GSTR3B for the February 22. Government has given retained that power that certain class of persons they can give some relaxation, like a company liquidation or some proceedings are pending before the National Company Law Tribunal, this NCLT and all. So all those exemptions can be there. They will prescribe by way of rules. And as I said that originally they introduced with this 42, 43, 43A. Now all those matching concepts have done away with forever, because in any case these sections never come into force, and therefore now all these are omitted. So this two-way communication between the supplier and the recipient for getting this credit matched and all those things are now done away with. It's only on a self-assessment basis as provided in section 41. And there are miscellaneous amendment. This section 29(2) cancellation of a registration. The composite dealers, I am told that they are to file only one return in a year and the payment on a monthly basis or quarterly basis. So the original provision says that their registration can be cancelled if they fail to furnish the return for the 3 consecutive tax periods. So far as the furnishing of the return is concerned, that tax period is a year. So if they don't file the return for 3 consecutive years, then only their registration can be cancelled because of the subsequent changes in the law. So now that is amended. They say that if they are not filing the return for any particular financial year beyond 3 months from the due date of furnishing the return, then the GST officer can cancel their registration. So say for example, for financial year 21-22, the composition dealer is required to file his return by 30th June of 22. If he don't file the return by 30th September 2022, then his registration can be cancelled by the GST officer. And for other registered person, non-furnishing of returns, today it is for 6 months, but now it will be as per the period prescribed. So we will see by way of rules that what is the period they prescribe for cancellation of the registration. Now some welcome measures are also there. Section 49 of the CGST Act, payment of tax, interest, penalty and other amounts. So the transfer of CGST and IGST amount from a registered person's cash ledger between distinct person. Now, if you have registration in Gujarat, registration in Maharashtra, you have a cash balance in CGST, IGST in Gujarat. Today, you are not allowed to transfer within the same GST. Today within same GST you can transfer, but now onwards within the same PAN to another GST also you will be able to transfer. So that's a welcome measure, you can say. However, that also comes with a condition that there should not be any unpaid liability in electronic liability register. So first you will have to clear the liability in Gujarat, then only that balance can be transferred to Maharashtra. And as we see that section 49(12), it gets reference in 38. It says that the supplier should not avail or utilize the input tax credit as per the limits given in 49(12). It's basically nothing but giving of this statutory recognition to Rule 86B. 86B says that for a class of persons, it is not permissible to utilize the input tax credit fully to discharge his GST liability. So some amount is to be paid in cash. Now, challenge to Rule 86B is also there. It is also pending before various high courts that it has no statutory recognition. Ultimately, now this 49(12) is inserted to say that maximum portion of output tax liability which may be discharged through electronic credit ledger. So say for example, I am a class of a person, one class of a person, where it is prescribed that I can utilize my input tax credit to the extent of 50% of my output tax liability. Now, output tax liability is 100 rupees. I can utilize the input tax credit to the extent of 50 only. If I use in excess of 50, then my recipients, all my recipients will get their input tax credit as a blocked credits, restricted credit. So this is the impact. And now they are, by introducing this provision, they are giving a legal backing to Rule 86B. There is a interesting amendment, and you will realize that how the government has missed this point. Section 50 is the only section in GST law which can charge interest on a delayed payment of tax. Now, section 73 and 74 are the demand and recovery provision. under which a GST officer can issue the show cause notice. 73 talks about the show cause notice without any suppression, fraud, etc. 74 is with suppression and fraud. Now, what can be recovered? That is also given in the section 73 and 74. Tax not paid, tax short paid, tax erroneously refunded, input tax credit wrongly availed, and input tax credit wrongly utilized. So these are the 5 circumstances under which the demand notice under 73 or 74 can be there. But if you look at closely this subsection 1 of both these sections, it says that along with interest payable under section 50. So 73 and 74 independently they are not charging any interest. They say that for charging of interest you go to section 50. Now if you look at section 50 subsection 1, which says that interest is to be paid on a tax not paid, short paid, or erroneously refunded. It is a miss by the government that they forgot to mention the input tax credit wrongly availed or wrongly utilized. So it was possible to argue, because this amendment is coming retrospectively from effect of 1st July 2017. If this amendment was not there, then it was possible to argue that, say for example, you avail the input tax credit wrongly. For an example, motor car credit is not available to you. If you have availed the credit of motor car as per section 17(5)(a), that can be recovered because that credit is not available to you. But whether merely because you availed, are you supposed to pay interest also to the government? According to existing section 50 subsection 1, there is no mentioning of input tax credit at all. It is possible to argue that interest is not payable. Let us continue with the same illustration. Suppose this motor car credit you have availed and you have utilized. Now there is no doubt that 73 or 74 will have a mechanism to recover that credit from you because it's ultimately is not eligible. But in a case, considering a case where you have utilized the credit, whether you are liable to pay interest or not, if you look at section 50 subsection 1 today, even if you are utilized, you are not liable to pay any interest. You are not liable to pay any interest. Right? Now, with this retrospective amendment, what they have done, subsection 3 of section 50 used to deal with this 42, 43 matching, and whatever the credit you avail in excess of that matching, then you pay along with 24% interest. Now that section 42, 43, now there's a meaningless section. They are omitted. So subsection 3 is replaced, substituted with a retrospective effect to say that if the SSC has availed the input tax credit wrongly and utilized, then only he has to pay interest. So in the first case, if you have availed the input tax credit of motor car, you have not utilized, you are not liable to pay any interest. But if you have utilized this, now as per this section, because it is coming with retrospective effect, you will have to pay interest. So this is the impact of this. Recently, the Madras High Court, in case of these Akhi hotels, had a chance to consider this. Demand notice was issued under section 74 on the SSE, but SSE did not utilize the credit. He simply availed the credit. So the Madras High Court has interpreted in a way that when the SSE has not utilized, he is not liable to pay any interest. A nominal penalty of 10,000 rupees was imposed on the SSE for availing the wrong input tax credit. So jurisprudence is also in favor of the SSE. Now the only question will be, there will be many SSEs who might have paid the interest on the observation by the audit or on a self-assessment basis or whatever. Now whether he can claim the refund of this interest paid because he has simply availed, it has not utilized, right? So in those type of cases, whether he can get the refund or not, if suppose the tax was paid in 2018, 2019, and you have a time limit of 2 years from the relevant date. If you look at closely, section 54, which is pertaining to refund, it talks about the tax along with interest. Okay. section itself taking care of the refund of interest. So refund of interest is possible, but it should be within 2 years from the relevant date. And section 54 also talks about the relevant date in various circumstances. There is no relevant date for interest, refund of interest. So you can possibly argue that since there is no relevant date for interest, so even interest is paid in 2018, 19, 20 or 21. 21 in any case, you are within 2 years time limit. You can claim the refund. You must test this because there is no relevant date under section 54 for claiming refund of interest. So that also can be examined. Now, section 54, they have this refund of tax. So refund of balance in cash ledger as per the proviso to section 54 as of now, it takes care of this. You have to claim it through GSTR 3B only. Now there is a specific form which will be prescribed for that and not under GSTR 3B. And the scope of withdrawing of refund for recovery is also expanded. Today, if you claim the refund of unutilized input tax credit, because unutilized input tax credit can be under two circumstances only. One, if you are falling into inverted duty structure, and otherwise you have exported the goods or services. Your refund can be withheld if there are pending recovery, if you have sought a refund only for this unutilized ITC. If you are claiming refund of otherwise, say for example, for supplies to SEZ, export, refund of cash ledger, all those things, that cannot be withheld, even if the recovery is pending today. But now this section is proposed to be amended. This withholding of refund will be applicable to all kinds of refund. So even if you are claiming the refund from the cash ledger, your refund can be withheld if some recovery is pending. And there was a miss otherwise in relevant date for the SEZ, whether it is a date of raising the invoice or a payment of tax by the SEZ. Now that has been now made, it is very, very clear that the relevant date for claiming the refund under section 54 by the SEZ unit or developer would be from the date of furnishing the GSTR 3B for such supplies. And so there are other amendments, levy of late fee and all. And these are all amendments which are otherwise not impacting us. So I'm just keeping, that's all retrospective exemption granted. This alcoholic liquor, they say that it's not a supply itself. So all those things. And as I said that wherever they are giving any reference to section 43A, all those sections, the reference is removed because it's not required now. So this is all from my side from GST amendments. If you have any questions, I will take up and then I will hand it over to Manish for further deliberations.
There are 5 or 6 questions if we can
Yes,
take it.
you can take up, sir. Whatever is convenient to you, we can take up, sir.
We can just take up and finish off the GST
Yes.
part.
Yes, yes, sir. Yes, sir.
So the first question is, as sir told about 49.2, that is, if any one supplier is unrestricted for GST credit, for whole chain will be restricted?
Whole chain will be restricted, sir, because they are not talking about the supply, individual supply. They are talking about the supplier and the recipient. So I am your supplier. I am your supplier. I have committed any breach of this section 38. All my recipients will be treated alike. They all will go. So the magnitude of this amendment is very, very high.
The second question is, time limit should be seen as October GSTR 3B or November GSTR 3B?
No, sir, now it will be 30th November, fixed date, because it is dealing with the date of filing of the return for any particular month.
So even if I file for, say, August on 30th of November, I have to avail my credit by that date.
Yes, yes, you have to. Sir, suppose government extends the date of filing of this November GSTR 3B. The section says that you have to avail the input tax credit by 30th of November. So even if you are filing the month, the return for the month of November in 20th December or maybe 20th January, you must avail the input tax credit by 30th November, fixed date.
The other question is, deposits of one entity in 2 different states, what could be the transaction value? It can be just 1% addition or purchase cost.
Sir, I couldn't get it, sir.
I also can't get it. There's somebody with the name of Ajay, if they can be more specific, please. Then there's one question. Can the case be still in favor of the taxpayer that the supplier who is liable to pay tax is agent of the government and therefore the same cannot be stopped to be claimed to claim the ITC?
So today, in as the section 16(2)(c) stands, the people are challenging in that way only on this lines of Berulal Balchan that it's violative of Article 14 and 19(1)(g) because it's not treating me equally. Challenge is on basis of that only. But after this section 41 gets implemented, a specific mandate is given, and considering the, if you look at the history right from this September 2021 onwards, when we got this VKC's judgment by the Supreme Court, and then the Bharti Airtel. So wherever this constitutional challenge is, inequality is challenged before the Supreme Court. Supreme Court has ruled in favor of revenue only. So once this section 41 gets into picture, so how will you defend? Because it's a section mandate given in the law. Section itself says that if the tax is not paid by the supplier, recipient, it can be recovered from the recipient. So unless or until that is held to be unconstitutional or violative of principles of natural justice or equality, it will have its impact, sir. It has to be tested.
So in this case, if there is an import and if there is a technical glitch like currently we are seeing, that we have to search the BOE and then that entry is reflected in the following 2B, then it's like I'm paying tax to the department, but it's still not reflecting due to technical glitch.
I think this 2B will not apply for this bills of entry and other credits, sir, because it's referring to only invoices and debit notes, sir, furnished by the supplier. That is what it says. So 16(2)AA, as it inserted today, it talks about the invoice or a debit note issued by the supplier. So if you are an importer, you are paying tax under section proviso to section 5(1) of the IGST Act, it will not apply to you. You can take the credit. That will not make this credit as a restricted credit. And that is not forming part of 38 also. Obviously cannot be.
The next question is, free supplies can be charged at nominal value in GST invoice, and hence can it be said that it is not free supply and hence no input credit reversal under section 17(5)?
Sir, yes, if you are charging something, then it is not a free supply. So it will not get covered under 17(5). But so far as the question of free supply is concerned, whether the value is to be included or not under section 15, my suggestion is that you go by this section 15(2)(b) of the CGST Act. It says that if something which is in the scope of the supplier and it is done by the recipient, then the value of that has to be included. So it's already had a tainted this past, and all the decisions, right from this Navodit Agarwal's decision in case of this free diesel and all, they have said that the value of this free goods has to be included. Our authority of advance ruling in case of this global Vectra helicopter, they have said that the free fuel supplied by ONGC to the service provider value is to be included. That has been affirmed by the appellate authority. So according to me, though all those decisions are wrong, the Supreme Court decision in case of service tax of Intercontinental and Bayana Builders, section 67 is at par with section 15 of the CGST Act. But considering the past, it will be litigative. I can say, considering the facts of the each and every case, I can say. But if suppose your case is that genuinely you are supplying free of cost, which is in your scope only, it's falling out of 15(2)(b), you have a fair chance to succeed.
The next question is, section 73 talks of ITC wrongly availed or utilized. Then only merely availment will not attract. Citation and name of Madras High Court judgment.
Athi Hotels, AATHI Hotel, that I remember the name, is reported some 15 days back. I will give it to Rohan sir, Mukund sir. They will give it to you, sir. I will give the copy of the judgment itself.
And there is one question pertaining to SEZ relevant date. I think it has been answered. Sir, the GST questions are done. Manishji, I think the stage is yours now.
Thank you.
Thank you so much.
I am here.
Thank you.
If somebody has any questions subsequently also on GST, we will be happy to answer, sir. Thank you, sir.
Thank you. Thank you.
Thank you so much. Now, in this 20 or 25 minutes, we will discuss what are the changes under customs law. First and the biggest change in this budget, the proposal is the amendment of definition of proper officer. This is in the context whether DRI can issue show cause notice or not. DRI is an investigating authority under Customs Act, under Customs law. The role of investigating authority is to investigate, to find out whether there is an evasion or not. Over the period of time, what has happened, DRI, in addition to doing investigation, started issuing show cause notice also. As we know, under GST, we have provisions for recovery if there is an evasion, etc. Customs also, there is a provision for recovery under section 28, and the officer can issue show cause notice for the purpose of recovery, penalty, etc. There are 3 sections under Customs Act: 28, 28 AAA, and 124. For the purpose of section 28, it was contested that DRI is not a proper officer for issuing show cause notice. DRI therefore cannot issue show cause notice. Now, a lot of times we don't see this type of aspect while we are litigating. We generally see what are the merits of the case. Whether on merit, credit is available or credit is not available, what should be the value, what should be the classification, whether exemption is available or not. Lot of times we ignore this fact that the person who has issued show cause notice to us, the persons who has issued summons to us, whether in law, he can issue summons to us or not, or he can issue show cause notice to us or not. It's a part of investigation. We generally don't see. We just see the show cause notice has come, now reply. Try to put strong defense on this, on merits or on limitations if we have a case on this. We don't see whether the officer has jurisdiction to issue show cause notice or not. For issuing show cause notice, generally 3 tests has to be seen, whether officer has power to issue show cause notice or not. We have to see 3 tests. Number 1, the person who has issued show cause notice, whether he is a defined officer under that particular act. We take all the act. In all the act, there will be one section which will say these are the officers. For the purpose of GST, there will be list of officers will be called GST officers. Under FEMA also, under ED also, under Customs Act also, these are the officers for the purpose of this act. So first, the person who is issuing show cause notice must be officer in that act. That is number 1. Secondly, he must have power. Those powers are qua the range of officers, that these officers have these powers. That is number 2. So if a person is an officer under the act, second, whether the officer, the rank wise, whether those powers are given to that officer. Number 3, even though those powers are given, whether a specific assignment of function is there or not. Number 3, whether assignment of function is there or not. Broadly, it looks simple, but when we analyze, lot of times we find that person who has issued notice to us doesn't have power or is not assigned that function to him. Now, this issue was challenged before Supreme Court in past. And Supreme Court in case of Sayyid Ali held that DRI is not a proper officer, for the purpose of issuing show cause notice. Then the amendment was made under section 28, retrospective amendment was made. That was also challenged and it was pending in Delhi High Court in Mangli, whether DRI, that amendment is retrospective or not, whether it's a prospective. And even after this amendment, still DRI has power to issue show cause notice or not. Honorable Supreme Court in case of Cannon held DRI is not a proper officer for the purpose of issuing show cause notice. The reasons were twofold. Number 1, the Customs Act, a section which provides for issuing notification for the purpose of notifying officer, under that section, DRI is not mentioned as a person who is assigned. Assigned is a 3rd test. The officer who is assigned the function of issuing show cause notice. DRI is not under that assignment part. Second, section 28 provides for the proper officer. It's very interesting. See how grammar plays a role in the interpretation of law. Section 28 says the proper officer. The is different from a. A proper officer is different than the proper officer. So when the section says the proper officer means the officer who has done assessment of that bill of entry in respect of which import has happened, which means, in other words, there may be various assignments. Various officers may have power to issue show cause notice, no doubt. But out of all those officers, the very officer, the officer who has done assessment over that bill of entry, he is the only person, and he is the only person who can issue show cause notice to him. In other words, when out of various officers, if one officer has done assessment or has taken cognizance of particular offense, or he is aware about assessment, then only since he is aware about that assessment, the other person cannot come in between and question his judgment. Therefore, other officers are not proper officer. The officer who has done assessment of bill of entry can only be the proper officer. This is coming out from the language of section 28. Section 28 says the proper officer. Third, Supreme Court applies principle of committee. That's when we interpret a law, then there are sources of interpretation. Sometimes we also see, in addition to these sources, there are established rules. As in our GST presentation also we have mentioned, one of the principles, no one can be asked to perform impossible things, which means if any of the condition is impossible, then it will be deemed as if the person has fulfilled it. This is one of the principles. So likewise, there is a principle of committee. Principle of committee says, if two officers or more officers have a concurrent jurisdiction over a particular subject, which means no doubt 3, 4, 5 officers are officers, they have powers, they are assigned function also. Even all these 3 tests are fulfilled. Still, principle of committee says, if 2 officers have concurrent jurisdiction, then out of these 2, the first officer who has exercised his jurisdiction over a particular subject, for all subsequent matters, he will be only proper officer for the purpose of that matter. Therefore, the second officer who has not exercised initially is out. Applying this theory also, Supreme Court has held, since bill of entry is assessed by a particular officer, therefore that officer can only be an officer for the purpose of all subsequent proceedings by application of principle of committee. Now this section is amended by way of this budget proposal. This budget proposal, they have amended various sections to cure the defect. Honorable Supreme Court point out defect. To cure that defect, amendment has been made. Now to what extent this amendment takes care of the defect which is pointed out, that we have to see, that will be tested by courts. But by this amendment, they have made amendment in the section retrospectively, number 1. Secondly, they have also passed a validation section, we call it a validation, which validate past actions, which validate past actions, number 1. The section also validates past notifications, number 2. Then section also says it will be retrospectively. So any action which is done, though at the time when action was done, it was not valid, Validation Act says those sections are deemed to be valid. All the notifications are issued which didn't have force at the time when those were issued. Now validation clause 96 says those are deemed to be valid. Then third, they say the current sections will be deemed as if existed at the time when those notifications and actions were done. So this validations provision has also been incorporated to validate all the past actions. Now the question is, such type of validation, is it possible without even curing the defect? Such type of validation, a person who has already acted, the action is over. How can you now retrospectively allow something which was not valid? How can an action which is already performed can be validated? Now, there's a question which courts has to be tested. It has to be tested. For our purposes, we should understand wherever any of our clients who have been issued show cause notice by DRI, and he is contesting that we should take care of those aspects and we should see how courts are testing this amendment. This aspect has to be kept in mind, at least for those show cause notice which are issued by DRI. We have to see this. How this principle has to be applied in GST, etc. That's a separate thing, because each act will have a separate provisions. Now, second important amendment is valuation part. Section 14 of Customs Act provides for valuation of imported goods. Valuation means on what value we have to discharge customs duty. Government felt a lot of undervaluation is happening, and because of which lot of customs duty is escaping. Now, government has put additional obligation on importers to give data as and when required by government. So what happens? This discretion is given to officers to ask for additional details. Government feels that there is a systematic undervaluation going on in respect of some industry or in respect of some importers, and government wants to use this power to curb that undervaluation. Therefore, government says we will ask, if we want, we will ask for additional details, and you are under obligation to give us. See, earlier provision was there under Rule 12 of Customs Valuation Rules, which provides that government officer can, or customs officer can ask for any additional details if he feels for the purpose of valuation, but there was no obligation on the importer. Now, obligation is casted on the importer to give details, to provide information if required by customs officer. Now, to what extent these provisions will be used, to what are the restrictions over this provision when it comes to exercise of power, that has to be seen, that has to be tested, that in what way customs officer will use this type of power which is given to them. What in past we have feel that in cases of certificate of origin issues, for example, there are FTA exemption notifications. There are exemption notification under customs which grants exemption if goods are imported from particular countries. Those exemption notifications are called FTA exemptions, those are given in terms of FTA agreements. We must have seen in news also that India is signing free trade agreement with US, India is signing free trade agreement with Australia, etc. Those free trade agreement means if Indian importer is importing goods from Australia, then there will be a concessional rate applicable on those goods if those are imported from Australia. Now, for all those FTA exemptions, officers were given power to ask about, to inquire about the origin of goods, to find out that you are declaring as an Indian importer, you are declaring that goods are manufactured in Australia, but is it whether Australia is used as a channel or genuinely goods are manufactured in Australia? Or in other words, some Dubai person, some Chinese fellow first send goods to Australia and then those very same goods are imported into India. So whether Australia is used as a channel or genuinely goods are manufactured in Australia. So officer was given power to inquire about manufacturing cost, etc., to actually find out whether goods are originated in Australia or not. Or there will be some small value additions in Australia and the importer will show as if goods are actually originated, but the process would be very small in Australia. So those inquiries, the power for those inquiries were given to officer, but because of those powers, all the assessments and customs were kept provisional and a lot of litigations and disputes were raised. These are the second amendment which they have made now. Number third amendment is there is a provision of advance ruling under customs also. There is a provision for advance ruling like we have in GST. Same provision is there under Customs Act. Those provisions now government says the order which is obtained by advance ruling authority, from advance ruling authority, that order will be valid only for 3 years. The orders which is obtained from advance ruling will be valid only for 3 years. This amendment has come under Customs Act, not under GST. So GST, whatever advance ruling you take, it's perpetual. Under customs, it says it will be valid for 3 years. Now, this is in contradiction. The stand of government also is contradictory because assessment has 3 parts. Assessment means first you classify, that we call classification of goods. Number second, valuation of goods. Number third, apply exemption and then find out the duty applicable. Now, for the purpose of classification, when you obtain advanced ruling, there the advanced ruling provision will says it is valid for 3 years. After that 3 years expires, we don't know whether we will proceed for past imports, etc. It's not clear. Law doesn't provide for this. They should not, in fact, initiate any inquiry. But after this, what will happen? Whether SSC has to again obtain advanced ruling or not, that he has to see. However, when it comes to special valuation is also at par with advanced ruling. It's a separate topic altogether, but in short, we can say it's a branch who is expert in finding out the valuation. There earlier, the provision was a special valuation order would be valid for 5 years, and government amended that provision, and government provided that any order of special valuation branch will be perpetual. There, when it was a limited for 5 years, their government amended and provided for perpetual. Here, when it was perpetual, government amended and provided for 3 years. So this is, according to me, it's a contradictory stand. For the purpose of assessment, we have to see holistically. And if for valuation somebody has obtained advanced ruling, if it is perpetual, let it be perpetual for the purpose of classification also. But if for valuation there is a limited life, let it be there for classification also. So this policy should be uniform. There should not be confusion on this part. So here this amendment has been made, which provides that our advanced ruling will be valid for 3 years under customs law. Number 4, there's a lot of emphasis on digitalization. We all know. Under Customs Act, governments sometimes give concessions to inputs subject to actual user condition. Subject to actual user condition, which means government wants to ensure that the mobile manufacturer, if he is importing any raw materials, he should be exempted or there should be concession rate, provided he should use the imported raw materials for the manufacturing of mobile only, not for any other thing. To ensure that all those customs notification, there will be condition column which will say import is subject to IGCR rules. IGCR rules. Those rules, initially the compliance was manual. Now government has said, with some tweaking here and there, government has said all these compliance will be digitally now. So you need not go to officer, take permissions, etc. You send email, you file these reports, and at sitting at office, you will get approvals, etc. Now government has made amendment. Government says we are phasing out project import scheme. Now what is project import scheme? It was a scheme under Customs Act, which provides that if somebody wants to import the whole plant, whole factory from, let's say, US to India, whole factory is importing. They'll be disassembling in US and they'll be reassembling in India. There the scheme permitting that import at concessional rate. Government says we are phasing out that scheme. We don't want to promote imports of capital goods in India. Why? Because domestic manufacture of capital goods will get support. That's the reason cited by government for phasing out this project import scheme. This also a stand. There's a contradiction because there's a separate scheme which is called warehousing scheme under customs, manufacturing under customs bonded warehouse called mover in short, which permits import of all capital goods duty free. A scheme permits import of all capital goods duty free subject to some conditions. Whether you export or you don't export, it doesn't make any difference. All the capital goods can be imported duty free if somebody goes in mover. Now that scheme was introduced 2 years back or 3 years back. Now when on the one hand, government is introducing a scheme which permits import of capital goods duty free, and here government shows we are phasing out a project import scheme which permits a concessional rate that an importer can import the whole project at concessional rate. Now, after already existing a mover scheme, how this stand of government that since we want to promote domestic manufacturers, therefore we are phasing out project import scheme without even touching a mover scheme. There's a contradiction in that part. So really whether it will help domestic manufacturer of machineries or not, that is really questionable. Now, next government in this budget, a circular is issued which says SWS, social welfare surcharge, will also be exempted if there is an exemption of BCD, basic custom duty. issue is, a small issue is when all these cesses are levied under Finance Act. Exemption on duties are issued under Customs Act, under Section 5 of Customs Act. The issue is any exemption notification which is issued under Customs Act, whether that exemption notification will also cover all those cesses which are issued under Finance Act, because both are separate act. Finance Act is separate act, Customs Act is a separate act. Both are a statute, separate statute. Whether the exemption issued in the Customs Act will also cover or exemption or cess issued under different act. That matter is pending before Supreme Court. Here government has said SWS is levied on a percentage of customs duty. SWS is levied on the percentage of customs duty. When a customs duty itself is nil, any multiplication of that nil will also be nil. Therefore, arithmetically, SWS will be nil. It will not be demanded. Wherever there is a complete exemption from basic custom duty, like we have in advanced license scheme, like we have under EPCG, EOU, FTA exemptions, because a lot of show cause notice were pending, were issued, summons were issued by DRI demanding for SWS, even though there was complete exemption from BCD. Now, all those litigations will close now, thankfully, because of this circular. Now, there are a few amendments. Now, government also says we will relook at SEZ Act and we will recast SEZ Act. Lot of demands are made from industry. Lot of lands are vacant at SEZ premises. There are some SEZ units who wants to debond, but because of SEZ Act, they cannot debond it. These problems are existing. Therefore, to address those problems, government says we will relook at SEZ Act. We will reenact it with substantial changes. Let's see. Government has given deadline of September, that by September they will come out with new SEZ Act. So this promise has been made in the budget. The act has yet to come. Now on tariff aspect, customs, when we talk about customs, there is a Customs Act, there is a Customs Tariff Act. Customs Tariff Act provides for various different rates on the product. So government says we are tariffizing. We are doing tariffization. It's a new term. We are doing tariffization. What is meaning of this? Which means wherever there is an unconditional exemption, is there in terms of rate, all those entries of customs exemption notification will be shifted in the tariff itself. So it will be easier for importer to find out what is the final rate. At present, if you want to find out what is the rate, customs duty rate applicable on your product, first you have to see tariff, then you have to see exemption notification, whether applicable on your product or not. So after this amendment, you need not see two books. Only one book will be sufficient to find out what is the correct applicable customs duty on your product. At least for some products, this will be useful. It will not be applicable for those exemptions where the exemptions are conditionals, etc. For those, it will not be applicable. At least for some products, this tariffization will be useful. Now, government has termed a separate amendment called phased manufacturing plan. That is very good. Phased manufacturing plan. What is this? Government says for hearables, for wearables, etc., or the electronic items, we want that all those electronic items should be manufactured in India, and their components should also be manufactured in India. But I can't today. We Indian manufacturers don't have capacity today. So what government is doing? They have created a phased plan for 5 years. They have given in advance that for next 5 years, I'll be increasing customs duty on these items this way. So your concessions will be reduced, customs duty will be increased. But today in advance, you know, for next 5 years, at least what would be customs duty on those raw materials, on those finished goods, if somebody has a plan to import. This is called phased manufacturing plan. So whenever government feels there's a development in phase wise, these rates will be applicable. In advanced industry, you know, these will be applicable. It's type of promise, and it gives certainty to industry. Instead of coming out in night that from tomorrow onwards, this will be rate, no. So this phase manufacturing plan has come from some of the electronic items, and that will be useful. In addition to this, government has provided an end sunset date for exemption notification. Today, this is also a novel idea. Today, customs exemption notification doesn't have an end date. Many customs notification don't have an end date. That is, on which date this notification will come to end. Now, government has provided a sunset date for particular exemption notification. Those concept is borrowed from notifications issued under anti-dumping, safeguard duty, etc. Their notifications are issued for 5 years, but that impose additional duty. Here also government says we have power to provide a date on which a particular customs notification will come to an end. So what happens as an industry, you should know, number first, what you have to test, which exemption you are availing, whether that exemption has an end date or not. If end date or sunset date is approaching, you should react to it. You should file representation before board. So for the purpose of extension, so this action can be done. If you don't do this action, the consequences would be, you will find out, sir, tomorrow this notification was existing. Today you have to pay duty. Why? Because date has expired. So we have to be conscious on this part and find out whether our exemption notification which we are claiming has any exemption date or not. Now with this, we'll conclude a presentation or amendments in the customs. We can request for questions if we have.
Manishji, there's only one question.
Yes, sir.
Chapter heading 7117, imitation jewelry. All tariff items are changed with increased custom duty. Question is whether parts of such imitation jewelry are also covered, unlike 7113 or 7114, whether its category is mentioned, that article of jewelry and parts thereof.
Now, sir, it's all, what is the language of exemption? A short principle is this. When exemption notification has 3 parts, broadly 3 parts. First part of exemption notification will provide for a tariff entry. That is 8-digit classification, 4-digit classification. Second part of exemption notification will provide for description as to within the tariff item, what description government wants to provide for exemption. For example, if particular tariff item may have 3-4 products, out of 3-4 products, if description is provided only for 2 products, that is A and B, whether C and D, which can be classified as per tariff entry given in the notification, whether those C and D will also get exemption, answer is no. Because notification provides for description covers only A and B. Then third column is a rate, fourth column is a condition, etc. Now in this case, if a tariff entry for parts and for finished goods is provided in the tariff notification, number 1, if answer is yes, answer is covered, we clear first hurdle. Second hurdle is if your description of the exemption notification provides for finished goods as well as parts, you clear second hurdle. So we have to see exact entry of that notification and then we can give answer. It's not a very rocket science, but we have to see exact language of notification. That not only this, we can also see what we have seen in Surat. Major industry is textile industry. So we can find out in respect of textile industry, what are changes which have been made in this budget. We'll share with you a small note which will give a clear reflection of changes as far as textile industry is concerned. This will be very useful. Secondly, initially sir has mentioned that in respect of machineries. So again I repeat, if any of our client or if any of our industry friends is intending to import machineries, then there is a scheme called mover warehousing scheme, which provides for a complete duty exemption, which will be around 25% of cost of machinery. So you do not pay customs duty at all. That will be pure saving for you. So if anyone is going for expansion or going for import of machineries, etc., they can explore the option of mover schemes. These are with some conditions and procedure, but that options needs to be explored. That is, we need to sensitize our client in respect of mover scheme. That is my request, sir.
There have been 2 questions that have come up. Reference to such amendment is as below. As per Finance Bill 22 in the first schedule of the Customs Tariff Act, 3 in chapter 71, the entry in column 4 occurring against all the tariff items of heading 711, the entry 20% of rupees 400 per kg, whichever is higher shall be substituted.
Okay. Now, sir, these are all interpretation of tariff rates. Okay. For which we have to refer tariff, we have to refer amendment, we have to refer notification, then we have to see what is substituted, what is omitted. And then there are some cross omissions also, right? So all these queries with regard to rates are concerned. Therefore, we don't address in, it requires a lot of documents here and there. We have to see this. All those query can be answered. Okay. Through email, I will revert when it comes to tariff rate, changes of tariff rate. Legislative changes impact each and everyone.
So, sir, we can head towards the conclusion. All the questions have been answered and there are no more pending questions. I would request Mukund sir to give the vote of thanks.
Sir, this is a very successful webinar, particularly on the GST. Jigar Bhai has taken and covered all the points. Very minor changes he has already covered, particularly the 6 changes for taking the ITC, 6 conditions prescribed in section 38. He has taken all the conditions and details, and I think all the participants in this webinar has understand the changes is going to be proposed, and it is a very serious implications in the time to become. As well as Manish has taken the part of the customs in very detail, and particularly the definition change for the proper officer. The Canon India is a judgment of the Supreme Court which has created a havoc, and we all were expecting that some changes will come in this budget with the retrospective effect, and it was on the expected line. And Manish has a very detailed discuss that the changes has already been prescribed. As soon as the president will given the assent to this finance bill, the Canon India verdict will be nullified, and again the DRI will get his power. And as well as Manish has covered the issues in detail, particularly the mover scheme. Many viewers are not aware that mover scheme is a boon for the textile industry, because the mover scheme has a double benefit. You import the machinery, did not pay the customs duty, as well as you have no export obligation. So for the textile industry, it is a very welcome scheme for the government, because in the textile, we usually import machinery and we have no export at all the gray fabrics. So it is a very details has been covered by the Manish regarding the mover scheme. And at the last, all the participants on the webinar who has joined us, and so far the 24 are participants still with us. So thank you to all the participants, and thank you to everyone, to the learned speakers also. Thank you very much for sparing your times for our webinars, and
Thank you,
we will also take your times in future whenever we will require.
Thank you.
It will be our pleasure, sir.
Thank you. Thank you.
Thank you, sir.
Everyone. Thank you, Jigar ji. Thank you, Manish ji.